To understand this topic, one must first understand the underlying subject, the impending carbon tax. Now, the carbon tax is essentially the government putting a price on carbon emissions. The 500 top polluters will be required to pay a tax or levy on their carbon emissions per tonne of carbon released into the atmosphere. Prime Minister Julia Gillard has passed a climate change package in Parliament that will be put into implementation in July 2012. Of this package, the carbon tax is the first order of business. Now, businesses will be therefore required to pay $23 per tonne of their carbon emissions. An example of one of these businesses is the Nissan car manufacturing company. Essentially, the carbon tax levies a fee on the production, distribution, or use of fossil fuels based on how much carbon their combustion emits. The plan is for the price placed on the emissions to increase at a gradual pace until 2014, at which point the price will reach a top of $25.40 per tonne. In 2015, Australia will then switch over to an emissions trading scheme, replacing the carbon tax. This will create a market-based price on carbon and exclude the government from dictating carbon prices. An emissions trading scheme determines an acceptable level of emissions to be released by industry. This designated level of emissions that can be released means that, if it is surpassed, those who do so are officially committing an offence. Recent weekly income statistics said that men earn an average of $1,092.20 per week, and that women earn an average income of $740.10 per week. The Australian Treasury estimated that 9 out of 10 Australian households would be compensated $10.10 per week, which incidentally is 20 cents more than the anticipated impact of the carbon tax on households, which is set at $9.90 per week. At the University of Canberra, however, the NatSam Economic Modelling Unit estimated that the compensation package benefits for households would be higher than the Treasury expected, and that households would actually be compensated $10.90 per week. They also estimated that the carbon tax would only be $8.50 per week. This would mean that 9 out of 10 households in Australia would in fact be better off by approximately $1.40 per week. Statistically, the Treasury also estimated that 69% of households would be better off, and that 11.5% of households would be better off by more than $10 per week, and that only 4.8% of households would be worse off by $10 per week. Despite these promising statistics, opposition leader Tony Abbott advises businesses not to order their carbon permits, as he plans to dissolve the tax when he gets in. The problem is that despite Tony Abbott claiming that the tax will cost households, if this action on his part occurs, it could cost the Australian economy up to or even exceed $5 billion. It also appears that, despite what Mr. Abbott says, businesses will end up benefiting from the tax anyway. The government has promised a compensation package for businesses of up to $300 million. When the tax is implemented, this money could give incentive for businesses to buy into greener forms of energy and to keep their emissions down. There are, of course, points of view from the opposite end of the spectrum. The WWF's National Manager of Freshwater, Reef Coordinator, and Queensland Office Manager, Nick Heath, stated that it's tremendous. It's long overdue and should have been implemented years ago. He also said that companies need to focus more heavily on their carbon abatement curves. Now, carbon abatement curves rank companies' opportunities to secure consumption. They rank these opportunities from lowest to highest cost. He stated that if companies put more time into their carbon abatement curves, they would be more prepared for carbon tax and would make more profit. This would give companies real incentive to think ahead. People just need to look at the success of a carbon tax in other countries in order to understand why we need it. Sweden, for example, introduced a carbon tax in 1991 at $150 per tonne. By 2006, Sweden had experienced a 44% economic growth on fixed prices. The Swedish carbon tax also puts $15 billion into public funds and financial reserves annually. Sweden alone should be proof enough that carbon tax works. One basic thing that people want to know is, will food prices go up, and how will this tax affect commodities? The simple answer is yes, food prices will go up, and commodities will be more expensive. However, not by much. For example, milk prices are expected to increase by only 1%, fruit, Vegetables, meat, and seafood prices are expected to rise by approximately only 0.4%, and takeaway food prices are expected to increase by roughly 20 cents. Prime Minister Julia Gillard stated in Parliament that every cent raised from pricing carbon will go to assisting households, helping businesses manage the transition, and funding climate change programs. Statistically, the government has said that up to 50% of the revenue raised by the tax will go back to households, and that approximately 33% will go to carbon-emitting companies. In terms of numbers, the government has said that over 3 years, $15 billion of carbon tax revenue will go back to low and middle income earners, a further $9 billion in tax revenue will go towards compensation and support of jobs in affected industries, and also that $14 billion will go to greener energy solutions. So, how will the carbon tax affect distribution of income and wealth in Australia? In the end, it comes down to category of household and type of business. Carbon-emitting businesses will be taxed on their carbon emissions. However, $300 million will compensate those businesses. This, in the long run, could mean that those businesses will end up making profit. If businesses take the advice of Nick Heath and focus on their carbon abatement curves and prepare for the tax, as opposed to deflecting the tax like Tony Abbott suggests, they will end up making profit and even have incentive to invest in greener energy in order to lower their carbon costs. Richer households will not be compensated as thoroughly as low and middle income households, and could potentially fall within the 4.8% of households worse off by $10 per week. However, lower and middle income earners will be compensated by approximately $10 to $11 per week. Many of these households will fall into the 69% that will be better off in general, and some will even fall into the 11.5% that will be better off by $10 per week. Also, the fact that high-income earning households will either stay the same financially or be worse off by up to $10 per week means little. However, low-income earning households being better off by up to $10 per week will make a sizable difference. This has the potential to close the gap of distribution of income and wealth in Australia by a large amount. Lastly, people must also realise that although commodity prices will rise, this should not affect household wealth, as the price rises will not be large. Essentially, the carbon tax will lower emissions and even out the distribution of income and wealth in Australia by rewarding lower income households and compensating big business. This tax is long overdue and will be a positive step towards Australia's battle with climate change, both economically and environmentally.